Yeah, yeah.
Hello everyone, we are talking to Kishor Ostwal ji. He is CMD for CNI Research. How are you, sir?
I'm fine. How are you?
I'm fine, thank you. किशोर जी आज हमारे लिए दिवाली की टिप्स बताने वाले हैं and he is into this since long now, I think more than 2.5 decades. So let's start.
Yes,
Sir, हमें आपकी कंपनी के बारे
sure.
में बताइए. What is your core business?
CNI Research is a listed company and the core business is research. We are partner with Bloomberg, Dow Jones, Reuters, Capital IQ, FactSet, ISI Emerging Market, Bluemetrics, etc., etc., and probably all media in India. And probably CNI is the only research agency which has partnership with all of these international agencies. And since we don't have a broking with us, we are only a research house. People prefer to take an independent professional views from us, and we are successful. Whatever research we have done in last 2 decades has become a success story. A lot of companies which we found out first time in India has become multi-baggers. Some stocks have become 100 baggers. Some stocks have become even 1,000 baggers. To name few companies like VIP, we entered. We did this research when it was 34 rupees, 10 paid up, and Sera Sanitation we did at 90 rupees, and Oriental Aromatics we did at 110 rupees, Vimplast we did at 120 rupees. These names were not even aware to stock markets when we found out these companies. So our job is to find out companies which are potentially undervalued and investors can make big money out of it. Our recent research was Integra Engineering at 53 rupees, currently trading at 280, 290, or maybe 300, I'm not sure. But we found out just a year back at 53 rupees. So this is our approach always, that we try to find out companies with great fundamentals, which has a potential to grow many times. And sometimes people always try and analyze only price earning ratio or EPS, etc. But that is not a correct method of valuing stocks. And we were also successful in determining the Nifty trend since 2008 post Lehman. I think we were the only agency who have predicted Nifty 20,000 also. And today also I'm predicting, on record I'm saying Nifty will touch 40,700 by 2027. Now this, if you can keep a benchmark for your investment, you can make money, because if Nifty has to double from here, stocks might double 5 to 10x. This is what we have been doing in CNI. Today, 23,000 members are following us in CNI Research. And we basically give this advice to only small and retail investors who do not get proper advice.
Okay. So, but today we are here to talk and take your advice for everybody. So, tell us about effects.
Yeah, sure, sure.
Yeah, sir. Tell us about the effects and post effects of the war, क्योंकि war end भी तो होगी.
Effects of war you have already seen. I need not explain you, because this Russia and Ukraine war, we saw Nifty of 15,400, and even though the war is going on, Nifty was up 33%. And you take any 2003 war, you take Kargil, you take any war, post-war Nifty has goes up. Somebody had rightly said, Nifty और इंसान दोनों को ऊपर ही जाना है. निफ्टी और इंसान को दोनों को ऊपर ही जाना है. So that has to be kept in mind. That has to be kept in mind. Now let us analyze these two wars, Russia and Ukraine. Yes, that had a major impact on commodities, because Russia as well as Ukraine were large suppliers of commodities and power and oil. To some extent, Europe was affected, but they also now managed to get it adjusted, and you have seen markets going up even after this war. But coming to Israel and Palestine war, this is a 30 years old war, and it will continue for another 30 years. I don't think so. This affects none of these two countries manufacture oil or produce oil, so they will not have any impact on global economies. War is only a psychological ghost created before investors so that, in panic, they sell their investment, and that is what big people want. Because every rally is built on retail investors selling. Unless you sell on fear, next rally will not come.
Right.
So post-war, market will go up, and you never know this whether this war will continue for a year or 2 years. After maybe another 15, 20 days or 2 months, nobody will even talk about war. Like nobody is now talking about Russia and Ukraine.
Right. So then how do you see the
Yeah.
market trends, current market trends?
Yes. Now, as I told you, my target of Nifty is 40,700. Now, volatility is a factor of creation. As I told you, ghost. They create ghost. You sell, I buy. You sell, I buy. 10 times you sell, I buy. And when you buy, I'll start selling at 20% higher prices. This is a market trend. Now, for market trend, there are two methods of valuing markets. Most of the people go by a conventional method of price earning ratio. So let us first talk about the price earning ratio. Then I'll discuss a second method which nobody try to follow in India. Price earning ratio. Our 25 years average price earning ratio, 33 years, not 25, 33 years price earning ratio is 25. That means even worst of the times we have average sustained 25 price earning ratio. Okay, the low was 13 and a half, but it bounced back, and again high of 48 also we have seen, but by and large average 25. The current price earning ratio X24 is just 18. 18. So I don't know how investors are even reacting that war हो गया तो बाजार गिर जाएगा. अरे price earning 18 है, 25 तक अगर जाना है तो भी Nifty will become 30,000. When you have a scope of 50,000 upward Nifty only on a price earning mechanism, then where is the question of seeing a reversal in market trend? Market has to go up, it will go up, and these targets will come.
Okay. So
Next method. This is the one method I discussed, the price earning ratio.
yes, sir.
This is the one method I have discussed, price earning ratio, which
Right.
is a very common even for stocks. A lot of people follow price earning ratio, EPS, though we don't see that in research. The global valuation mechanism of markets is market capitalization to GDP. And historically, India has touched a high of 149% in 2007. And the average 10 years market capitalization to GDP is 90%. Today, our market capitalization is around $3.7 trillion dollars, and our GDP is also $3.75 trillion dollars. So probably we are very close to 100% ratio or 1. So which is just 10% premium to the 10 years average, which is not too exorbitant. And since we have seen a up of 149%, there is a 50% scope for market to go up. And looking to this valuation mechanism, which even Warren Buffett follows, I think market has a potential upside.
Okay. Sir, which industry we should look for?
I think industry-wise, banking is doing well, but since there was a massive run-up, I would even avoid banking, IT. You should really look up for PSU stocks. You should look for a defense stories. You should look for railways. You should look for real estate. You should look for housing, and you should look for engineering. These are the 5, 6 sectors which will do very well in coming time. The reason India's growth story is everybody is talking all about. Now the growth, there are 4 pillars of growth. One is cement, one is steel, one is auto, which is known to market, and they have taken their positions in these segments. So probably having seen that they have taken position, retail can go along with them and earn 10, 20%, but not a big money will follow from their investment in this sector. But the fourth sector, which is a key for India's growth, that is engineering. Engineering is a pillar. And first time I'm seeing the numbers in all engineering companies are coming super duper. So this segment we can give you 500 to 1000% return probably in next 4 5 years. So you should really look for railways, engineering, housing, real estate as a sector for investment.
Okay. And which stocks or industry should be completely avoided as per you?
There is nothing that we should avoid sector wise. I would go that company wise. Basically you should have bottom up approach, and you should avoid all stock which are trading at the 30 plus price earning ratio. Even if it is a good, even if it is a highly scalable business model, but you should always keep in mind one bad news and the stock can get crashed by 40 50%. Like Infosys, I'll give you best example. A couple of years back, Infosys, the number one company of India, was trading at 1900 rupees. One quarter bad came, IT, some negative came, the stock crashed to 1200, and still, even today, it is struggling to cross 1500. So after 2 years also, if I'm not getting my price of 1900, what is the fun in investing in a company like Infosys? But there are some stocks which, if you invest today, you will get at least 10 times return. I would not like to name specific stocks, small stocks, because you people always label, small stock, somebody is pushing and all these things. But there are many stocks which are available at 7, 8, 9 price earning ratio. So anything below 10 price earning ratio, if that is manageable and the promoters are good, the business is scalable. And the last criteria is one must check two aspects: your market cap to sales ratio, which nobody generally checks it. In
Okay.
research, we check it. What is the revenue and what is the market cap? Because if revenue is 2000 crore and market cap is 300 crores, then I'll definitely go for that company. If revenue is 300 crores and market cap is 2000 crores, I will never touch that company.
Okay. So what are the major triggers to see for a long-term stock investment?
Yes, as I told you, my first major trigger is price earning ratio, which is 18. So there is major upside. The GDP projections which have been made by IMF, they are pulling us around. And India has followed a conservative approach, announced less and perform better, like Infosys. So India also, finance ministry announced our GDP will be 6.75%. But yesterday, even RBI governor said that our GDP will be upgraded. So in the second quarter, I have a feeling and I have some working that our GDP will be past 7%. So if you are growing past 7%, you are the largest growing country in the world. So therefore, you can't miss India's story. This is a major trigger. Secondly, reforms. Reforms is the second issue. And post this 2024 election, there will be a next round of major reforms that will take markets to a new heights.
Okay. So which best buys you would suggest for this year, this new year?
This new year, I will suggest Avantel, Mindtech, then your Sukhjit Starch, then Investment Precision, then Railtel. These are the stocks. These are the stocks which will help make money, and everything has something specific in that. Like Investment Precision, they are the only company manufacturing titanium casting. And titanium goes into defense. Like our Tejas aeroplane, they are using titanium. Now, who is manufacturing titanium? Only Investment Precision. And Rekha Shah holds 10% in the stake in that company. Rekha Shah is Nimish Shah's wife. So that is an added advantage to have a confidence for you that some big investor is already there. And with defense story, this stock can be a great multiplier. Sukhjit Sarg in their balance sheet, they have said that they are expanding by 25% capacity, and also they are doing some engineering from to create hydrogen from maize starch, corn starch. So hydrogen is a need of the hour today. We are going into next stage of power, that is hydrogen. And Sukhjit Sir will be a great company in hydrogen play.
Okay. So how do you look at the markets till next quarter?
Till next quarter, up and down. It is a very short time you have said, because next quarter is before election. So they will create a ghost before you. Some news agency will come and say, Congress is winning 280 seats, market will go down. Next day somebody will come, no, BJP will come 350, market will go up. So next 3 months you become trader. If market corrects, buy dips.
Okay. Reason for this question was that people don't want to now understand for next year. They want to understand what is going to happen in 3 months. So it's a fast track.
My investor even doesn't want to. My investor doesn't want to know even 3 months. They want to know what is going to happen after 3 days.
So that's the point. Still, I'm asking for the quarter.
So the answer is the buy dips, buy dips, buy dips. Find out a value stock and trade it. I mean, the day before yesterday we found out few stocks. They rose up 30% in 2 days. Investors are happy. So you find out such stocks, trade 30%, take 30%, sell 50% of your portfolio, reduce cost by 60%, and enjoy.
Okay.
But wherever result, I have found out one company I'll mention today, Loyal Equipment. I have just found out this couple of months back at 110 rupees. Today it is upper circuit at 177. Only after company announced fabulous results. But we had predicted that 110 level, that this company, though making losses, is an engineering company and they will report fabulous results. So you have to find out some companies which are going to do better. And that's very easy. It's not that difficult task. And in research, we do that only.
Right. So how do you look at metals?
This is a very important question. Metals, do you remember in 2003 or 98 or 2000, the banking used to get a P of 3.
Right.
Banking used to get a price earning ratio of 3.
Right.
Now they are getting a price earning ratio of 20. Okay, because banking has become a matured industry, and now investors are flocking to banking and they are buying banking stocks in a big way. And they feel that India's growth is directly linked with the bank. Now come to metal. I'll put on record two things, that global scenario has changed post-COVID. Post this COVID, lot of equations have changed. Almost a $9 trillion currency has been printed by global economies, including US. And that liquidity is there in the market. And that liquidity has gone into few segments like energy, metal, and something else. So metal is one of the sector where that money had flown. Metal is changing its shape of commodity. As of today, we largely know metals as a commodities and give a maximum 5P or 5-6P, nothing more beyond that. But in a couple of years, or maybe 4-5 years down the line, I personally believe that metal will become a normal consumption story, because construction is rising, infrastructure is rising. All this will require metal, and there are no capacity. In India, we have 150 million tons capacity for metals, and they have already announced to make it to 300 million tons by 2028-29. And the next 6 years, we are doubling our metal capacity. And experts even believe that even after doubling the capacities in 6 years' time, we'll exhaust metal capacity completely. And given that scenario, I feel metal has a bright, bright future. But you will have to have patience in metals. Like private companies have given you good valuations, like JSW Steel, Jindal Steel. They're trading at 3 lakh crores, whereas SAIL is still at 30,000 crores. But SAIL has to catch up that sooner than later. So you have to bet on underdogs, and SAIL is one of the underdog stocks.
Okay. So what about the precious metals? Gold, silver.
Precious metal,
Yes.
yeah, this has to go up. Silver has been consolidating around 65,000 to 75,000, not able to breach 76,000. But the industrial consumption is rising so much in silver, sooner than later it has to break out. Once it gives a technical breakout of 77,000 or say 80,000, then it won't stop. I personally see that it can double in next 2 years. Similarly, gold, I see it should cross 1 lakh rupees from current 62,000 or 63,000, whatever.
Okay. So what message you
And
would
this,
like? Yeah, sorry, Satan.
given the geopolitical issues, there could be a great demand for gold at country levels, not retail levels, country level. For example, if some country feels no, the geopolitical situation has gone bad, I should not hold dollars. So they will immediately swap dollar to gold only. So there might be spikes. If the geopolitical situation go back, the gold demand will be fascinating.
Okay. So what message you would like to give to the investors?
I think you have missed one question in the entire discussion. That is the political view,
Yes.
political scenario.
Yes.
So by and large, our calculations suggest that BJP will be coming to power, irrespective of hue and cry made by media or all other sources. The reason, there are three reasons. One, by January, Ram Mandir will be open for darshan. By March, there will be a Saudi Arabia, there will be Saudi, where is that Hindu temple? UAE, there is a Hindu temple. Swaminarayan, biggest Swaminarayan temple is opening in March.
Yes.
Swaminarayan Mandir is opening in March. And third important thing that he has reduced the age for voting, that is 18 years. And all new generation wants Modi only. That is for sure. So the reduction of age means increase in voters would go in favor of BJP. And fourth is that that quota, which the women quota which they have given, that will go in favor of BJP. So in all probability, it looks like that BJP will come to power. There is no political instability. So investors should not really get bogged down by these issues, and they should go on quality stock. Now, last your question you asked me, what is the message to the investor?
Yes.
The message to the investors: this is like a flowing river. The river flows; it never stops. You go to Ganga and see. I had been to recently to visit Ganga, and I found that whatever you try and do, the water flows. It doesn't stop. Our share market is like same, exactly same like a flowing river. It doesn't stop. So you go there, take a mug, take a small water out of it. That's okay. If you try to take a bucket, then it will hit you back. Here I define market in three parts. I would classify the markets: the ocean, the river, and the pond. The ocean is only for FII, DII, where they can afford to take big hits and hold stocks for 2 years, 3 years, 4 years view. Like Infosys, as I said, they are comfortable. Even if it fell down by 500 rupees, it is not affecting their balance sheet because this is they are trading in ocean. There are many stocks. So one stock fall on, they really don't bother. But retail investor really bother. The second category is the river. The river is for mid caps, where large number of companies are scaling up their operation. They are taking advantage of these global policies. They are taking advantage of government policies, PLI schemes, and their numbers are rising. This is a river, but here also the returns will be linked with your risk. The returns will be limited. So the last category is the pond. The pond is the segment is for retail investor, where you can find out a company trading at 5, 6, 7 P, and just wait, it will blast like anything. It will give 100% return in 2, 3, 4 months time. You keep on churning your stocks, and my message will be very simple. At 100% profit, sell 50%, take your money, and go into second stock. So what happens after 5 years is that your stock, which is of zero cost, will become 100x. Otherwise, everybody comes on record and says that अरे Infosys लिया होता था 200 करोड़ बन गया था. पर लिया किसने और रखा किसने? और रखने का एक मैकेनिज्म होता है. अभी भी आप कोई भी स्टॉक ले उसको 50% 100% ऊपर में 50% बेचो और फ्री का एक पोर्टफोलियो बना के उसमें डाल दीजिए, तो 20 साल बाद आपको दिखेगा कि मैंने ये स्टॉक लिया भी था और जीरो कॉस्ट पे रखा भी है और उसका 100x हो गया तो भी मैं एंजॉय कर रहा हूँ. Like Sera Sanitation, all my investors are holding Sera Sanitation. I found out at 90 rupees today the price is 40,000 rupees in just 11 years. And
Wow.
investors are asking me what to do. Well, so long as company is doing well, why you want to sell? Your cost is zero. Hold on. If something goes wrong in the company, they will hit a 10-20% lower circuit. Sell that time. Till that time, hold your stock. And this is my foremost advice to retail investors. Define your strategy and avoid penny stocks. In bull market, all penny stocks moves up like Jayprakash Associates, Suzlon, Yes Bank. I don't see there is a point. Yes Bank is trading at 46,000 crores with no business model, and BSE, Bombay Stock Exchange, is trading at 25,000 crore with a scalable business model. So which one has to pick up their own stock. I would go with BSE and not Yes Bank.
Right. Okay, so we have missed out on the SME trend. SME is just flooding in. So, what do you say about that? A quick question, just for another 2 minutes.
I would say that SME, avoid it now, and when it come on the main bourse, we'll reassess, because there are a lot of ifs and buts in SME. A lot of promoters there is a question mark. A lot of companies there is question mark, and even the quality of investment bankers there is a question mark. The investigation which is required to be done in SME companies, it is again there is a question mark. So I would suggest avoid it. Let it come on main boss. We will do it. We'll verify, investigate. If found good, then we'll recommend also.
Okay, I agree to it, sir. I really agree
Yeah.
to it because I have assessed myself many companies and would not like to comment more, but then I hope everybody understands what I'm saying. So it was very nice talking to you,
Yeah,
Kishore.
yeah, that is not even. Thank
Yeah,
you.
it was very nice. Thank you so much, sir.
Thank you. Thank you.
Yes,
Thank
sir.
you.